Hello and welcome to the L&G Just Covered podcast, where we talk to advisors and other key stakeholders around their views and opinions in the intermediary space. My name's Wayne.
And I'm Hazel, and today we are really lucky to be joined by Sidney, who I think is in his first few weeks as Managing Director at L&C. So Sidney, welcome. It's really good to have you on. How are things?
Morning, and really pleased to be here, and things are good.
Yeah, good. And in terms of your background, I'm really excited to speak to you today because even in the kind of prelude that we've just had, conversing, you've got so much experience in the mortgage market, provider market, intermediary market, and yeah, really look forward to tapping into that. Could you start us off just telling us a little bit about where your career started and how did you end up in this industry?
So, always an interesting question. I mean, I was at Barclays just before L&C, and been at Barclays what feels like forever, but it's a really interesting journey because, as I was saying earlier on, I think it's not necessarily how long, it's more about what you do. And I did so much. So I worked in so many different departments. I've worked in corporate lending, business banking, retail branch, marketing. I even worked in somewhere called property services for a little while, which was an interesting year or so, and also the card business before I got into mortgages. So my background, I guess, was pretty varied. But I really made sure that I kind of crossed strategic, operational, tactical, and customer facing, because I think in reality, what I tried to do was arm myself with enough to make sure that I always had the voice of customer. I don't think you can build propositions without the voice of customer, nor can you do it the other way around. So you always, in my view, need to understand customer, proposition, products, and in a business like Barclays, colleague. So the intersectionality of all of that is what makes, in my view, a strong leader, which is why I very deliberately and intentionally moved across many different disciplines.
Yeah, I couldn't agree more because I think when I reflect on the careers of those who have been successful and they've got a view of each lens. And as we were chatting about beforehand, it's having that understanding of, I can see where X side is coming from, but we need to reach Y, and how do we do it together? In terms of that agility piece, I guess some people might be listening and thinking, oh, it takes quite a lot of bravery to think I'll not do that linear path along one route. What was it that drew you to all those different things?
So I was, and that's a really interesting question because I don't know whether it's bravery or stupidity, but somewhere between the two probably works. But it's worked for me. So I think one, I like change, I like transformation, I like to make things work, and I like to understand root cause and get to an end result. And you do that for a period, and then steady state becomes less appealing. So actually, maybe crazily, I try and find myself in another situation, I get an opportunity to transform. But I think it probably stems from my formative years because I was on all sorts of graduate programs, accelerated schemes, all that sort of stuff. And you were often plucked out and put into positions and invariably unknown. So I wouldn't say it was sink or swim, but you were put in situations where you're expected to be more of a jack of all trades. So you understood a lot of things without necessarily being a master of anything in particular. And I think over time you then decide to go into a silo or perhaps build out in a position that you feel comfortable. And I think in an organization like Barclays, not dissimilar to L&G, you can be whoever you want to be. I always say your career can be as long or as short or as deep or as shallow as you choose it to be. You can go in, if you are a trained accountant, you can do that. Trained lawyer, you can do that. A marketeer, you can do. There isn't any discipline you can't do. And I think that appeals to me. And that's partially why I did it. And so I think I continue, and many will say, I can never remember the phrase gamekeeper turned poacher or whatever it is. I can't remember, but you know what I mean. I've heard that a lot over the last few weeks, which has just amused me. But again, is it the unknown? I love the intermediary market. I think it's fast paced. I think and actually I like the volatility and the challenge of not knowing, because I think it means you have to be more agile as a business leader. Your thinking needs to be more rigorous and more robust, and you need to make and take quicker decisions. Some you're going to get right, some you may not. The reality is how you get back up and move on and continue to stick to your plan and your strategy and head to your North Star will always be the key for me.
I think that's really key, isn't it? Because you said it seems like it was ingrained within you to go into different places because you've been on the graduate training scheme. That fact you're going in, not really knowing anything, you're having to learn very, very quickly. You're having to make quick decisions then. That sounds like that really sort of built you up, if you like, and gave you the experience that you need for senior positions. Because a lot of the time when you go into a senior position, you're not going to know the detail, are you? You're going to have to make decisions. You're going to surround yourself with the right people and be able to have confidence in doing that. Like you say, some you'll get right, some you may get wrong. In terms of that that background, do you think that was almost the ideal background for you when you've arrived in some of these positions, particularly in Barclays and also as you are now?
Yeah, listen, undoubtedly. I mean, I know we talked previously about your stint in Barclays. In fact, you came back twice, so it couldn't have been that bad.
I did.
And absolutely right. And you know what was also interesting? You find yourself in a position where you're personally driven to succeed because you don't want to let yourself down, or even the organisation that's put enough trust in you to say, actually, we trust, and that's quite interesting as well. Because sometimes if you've got the right support, the right mentors and the right growth around you, others see things in you that you may not see in yourself. So actually you're very rarely put in a position that you're likely to fall over because people know your skill set sometimes better than you do. And that's why in my latter years, I spend a lot of time mentoring, sponsoring, and absolutely trying to get others to achieve the very best versions of themselves, even if they don't see it themselves.
Yeah, and that's so powerful, particularly nowadays, because we've talked about the old, if you talk about the advisor space, we talk the old advisor workforces and bank assurance and the things we were talking about just before, in that they're not around anymore. And from that angle, there was a lot of that coaching, mentoring that was happening, but also within organisations, as you're talking about, in terms of making sure people realise what their potential is. What I'm interested in is, because you're really used to jumping in different roles and all that type of thing, is there ever any trepidation just before you go in that role? And if there is, how do you deal with that? How do you keep that at bay, bearing in mind you're used to this moving around in different roles?
Total trepidation. I just hide it well. So look, is it trepidation? Look, trepidation maybe, but it's also a bit of adrenaline, right? Because and you hope that the adrenaline soothes the nerves and the trepidation, because I think this is where you generally have to back yourself. You have to back yourself and understand. And I've said this to teams that I've led so many times. You probably know more than you ever believe, and it's only when you find yourself in parallel situations that you think, I've seen that, smelt it, or I've seen something that feels like this over here. May not be the same, but there will have been lessons learned, there will have been situations, there will have been thoughts that went into that process that you can extrapolate over into something that's here. So actually, what you effectively do is you become almost this leader that's able to lead, and whatever the commodity is you're leading becomes a commodity. But the thinking around business growth will always be around, where are you now? Where do you need to get to? What does that gap look like? And what are the strategies you're going to build? And it's going to be around driving efficiency, optimizing processes you currently have, looking at new ways, new niches, different diversification. Some of this stuff is learned, some of this stuff is common sense. But I think over time, you just learn which lever to pull. And I think that's what I mean by back yourself. You're going to go in, it will feel, and you know what? I love feeling uncomfortable, because actually that's when I generally will do my best thinking when I am at my most uncomfortable, because that's the time I'm having to dig deep to say, there is a solution here, I need to find it, I'm not sure where it is, so I will have to dig deep. That's okay.
Yeah, I couldn't agree with that more, because I think whenever you're faced with a new role or a new task, certainly personally what I've found, exactly what you've just said, is something that becomes the norm at one employer or in one department when you go into that new employer or new department is sometimes of huge value because it's something they don't know about. So what you've taken for granted maybe now for a few years is actually hugely valuable knowledge that another area or business can learn from. And that's certainly what I've personally found in my career. Even moving departments in L&G, I've been able to take extra bits in, which is, it's been fantastic. And touching on what you said about that uncomfortable and enjoying that and that fast-paced kind of intermediary market, I'd love to know more about the market itself and your views on it, because I think especially as we were discussing in mortgages at the moment and with all the kind of geopolitical economy that we're in at the moment, what are your views and what kind of things should intermediaries be thinking about to keep themselves kind of stabilised in this environment?
So, look, stabilise is an interesting word in itself, right? I think the last, post-COVID years, I always say that we probably had a blueprint or a footprint. We had seasonality. We kind of knew how things would go. We knew it would peak and trough. COVID blew all of that. COVID blew that. And I think we are now seeing such geopolitical challenge around economies that's become so difficult to predict. It's meant that we've worked in really tough environments. We clearly had a low interest rate environment for several years, and then headed into a spiraling high interest rate environment and the challenge that brought, which meant you needed to think differently. And I think if I were to put a lender's hat on, the geopolitical challenge that led to volatility in swap rates and how you price and how you build your propositions and some of the actions you needed to take became inextricably difficult to manage, but not unmanageable, meant that you couldn't second guess. What you needed was agility. We said it already, you needed agility. And I think that's going to carry on, right? We've had lots of shocks, stamp duty, double cliff edge stamp duty. We've had interesting political decisions. We've had changes in governments all across the world, which will have an impact on the UK. Now, I said semi-jokingly, if you were to put a dozen economists in a room, you would probably have 15 different variations of where they think the economy will go. So I think the thing to do is to be more vigilant, so be more understanding. So first thing I would always say is watch and think about your customer, because no matter the economy, you need to nurture those customers, and those customers need to be wedded to you and see you as your first port of call as an advisor. So no matter what's going on, customer is king, because whatever else happens, you still need customers, right? So that would be the first thing. For me, the second thing is understand that you need to think differently. You need to be bolder, because I think in reality, we talked about this again a few minutes ago. Everybody, the Bank of England dropped base rate. There was talk of actually dropping by 50 basis points. Didn't happen, but still dropped. And so we're talking green shoots, right? So the economy, inflation, it will pick up and down a little bit, but the general trajectory is good. There's been real wage growth. That's all good, right? So actually all of that stuff says positivity, green shoots, etc. And then in the last few days, we've had swap rates rising at a rate of knots that nobody could second guess. And actually what that then does is it then has an impact subsequently on how products are priced. I know in the annuity space, you're jumping through hoops thinking this is fantastic, but clearly in a mortgage lending space, it's more challenging, especially for the lenders. So again, we're suddenly thinking, we're going to have 0.5% drop in base rate, and suddenly swaps go up. And you just think, wow. Yeah. But that's going to be the nature. That's the nature of the world. That's how it's going to be. And I quite like that.
We're in a world of multi-elements of information out there, particularly for the consumer, haven't we? Yep. Media gets involved, putting different things out, which might be positive, might be negative. I'm just interested in your views around the role of the advisor and sort of sifting through all of that and getting a simple message out to the consumer around, I'm here to help you. I'm here to sort of make sure that you're comfortable in what you're doing. How important is an advisor for them to do that, particularly in their environment currently and into the future turbulence that we might get over the next few years?
So the one thing that's guaranteed is there'll be turbulence. Don't know what that's going to be, but there will be. Simple as that. But you answered your own question. That is the role of the advisor. The role of the advisor for me is more critical now than it ever has been, because we need to demystify some of that noise and that's why I said customer is king. Our customers, we need to demystify that noise for them to the extent that they understand that we are their first port of call, right? Because there is a lot of noise. Some of it is misinformation, some of it is just misunderstood. And actually, most of it will come from, or a lot of it will come from friends, family, support networks, somebody else's lived experience, etc., all of which will be different to you. So you need somebody that's going to siphon through all of that, filter all of that noise out, so the focus is just on you, and that's us. And again, I say this a lot. I think the role of the advisor not only is more critical, I think it will ultimately expand at some stage as well to become more holistic, because there will be the threat of AI technology and all sorts of things that may impact the role, but nothing will change, in my view, the need to have advice. But I think that will stretch, because even if you think about it now, generationally, we're the first generation that have young kids and elderly parents, right? So actually what that means is you need more holistic advice that involves all elements of the financial journey. And that's where I think we'll see more and more tension, because it won't be just advise on X or just advise on Y. We'll probably need to start getting a more holistic. And that's not tomorrow, but I can definitely see that. Because I think as well, I often, look, I've got 2 teenage daughters, right? So I think about how they will want to buy and what they would expect. And I suspect it's nothing like we've even envisaged or imagined today.
I totally agree. You only got to look back 10, 15 years, haven't you? If you look back 20, 25 years, if you said to your younger self that you could download something like a film in seconds on your phone, you would have laughed at it.
You're spot on. I talked to somebody the other day about Blockbusters, and they were like, what the hell's Blockbusters, for a start? And secondly, why would you go up and queue up to take this big old lump of plastic and stick in a machine that nobody even knows or recognises now, and then happily pay fines every week? It's just crazy.
Don't mention Betamax. They'll get confused then.
But you're losing me there.
No, but you see, the reality again though is it's all of that, and it's even simple things. You know, if anybody had said to you, but here's one: if anybody had said that, asked you how much money you carried in your wallet 5 years ago, right, or even 4 years ago, you probably have some. If you ask them today, probably not much. Now, that's one example. But then if you actually said, do you actually carry cards in your wallet now?
I was going to say, I don't have a purse on me.
There you go. There you go. So not only have we gone from not carrying cash to using cards and being cashless and tapping, now we don't even carry a wallet and cards,
that's in the last 3 or 4 years.
So if you tell me that we can even imagine what the future looks like, because everybody talks about AI and what that will do, and it will do some phenomenal things, but I don't even think we have reimagined what that future could look like, because our kids, or certainly my kids, and subsequent generations will want to buy they will be very selective around who, right? And there will be lots of reasons around that. So there'll be lots of things that they'd expect to see from a company before they even decided to make that purchase. And then secondly, how? I can't see my kids thinking it will be cool to wait months for your mortgage to go through. Just can't see that.
Kids nowadays are searching for things. So we would generally, I would in particular, go to Google as the first place. But apparently Google that isn't the main search engine for a lot of people now. And a lot of children or kids are going to the likes of TikTok and also YouTube.
Yeah.
Well, annuities, we've just had data as well from our internal teams to do all the kind of behavioural science analysis. And actually the fastest growing information gathering on annuities is YouTube, which really shocked me, especially given the age bracket we're looking at.
None of that shocks me.
Yeah. No, TikTok doesn't, because you hear about that all the time. But the YouTube thing, you'd think, I thought people were going to TikTok away from YouTube.
But I think what what I would say is that our role is, look, we're regulated and we understand what we are doing, why, how, with whom, and all the implications. Whether TikTok's able to do that, I don't know yet. But the reality will be, for me, it's not necessarily discounting, but understanding. This is my point around agility. How do the two worlds merge? How do you get to where that information source or that information is being sought? How do you get that balance right? Because what it means is people are choosing to consume information in a different way. Are we choosing to present it, or are we still choosing to do it the way we did? Because that's for me commercial suicide.
Yeah.
You've got to
It's a
understand.
perception advice, and we talked about this on the previous episode, haven't we? And the customers will choose to take those little snippets of information. They may think they've had advice. In our world, that probably isn't regulatory advice per se. And like you say, merging those worlds is going to be a real challenge.
It is,
I
but
think as
that's
well,
good.
Yeah, very good.
Yeah, it's that blending. It's like going back to what you said about that holistic piece, isn't it? Because I guess what you see is when you go on these channels, it will be, I'm going to speak to you about mortgage or equity release or annuities or retirement. Whereas actually, as you've said, now we are getting these customers who fit in a kind of a space where all of the above is applicable. And actually it's about how do you blend those approaches. You know, even if we look at retirement, I mean, long ago it was just an annuity, then it was just drawdown, and now we're looking at blended approaches. And that's where advice is really, really needed. And some of these people still have mortgages potentially, which again in the past wouldn't have. So that's what I personally think AI, TikTok, etc. will struggle with, because you do need that specialist in the core centre, exactly as you said. What is the customer need and what's the nuance?
Sydney, just interestingly as well, what do you think providers across the piece, lenders, can learn for these other industries, bearing in mind we don't quite know where we might end up?
Yeah, that's a really difficult question to answer, because I think the power of tech, whether that's AI, generative AI, whatever it may be, can be immeasurable. So where you could end up could be ad infinitum, I don't know. But I think what you do is you kind of think about, okay, if I took my journey today, whatever my customer journey or whatever my strategic journey looks like, and think about, because there will clearly be elements in there you could easily reimagine and others that you can't. So nobody, if we take the previous example, there will be people far smarter than me that would have said, but it's obvious we were going to go from paper cash to phone, to cards in a wallet on a phone. Of course it was obvious. I saw that. Well, I didn't. I can see it as a journey and I can see how it's evolved, but I couldn't see it straight away. Now, there will be people that will be imagining our journey, and they will find ways of making that happen in a smarter, slicker way, using tech to do that. And that's the scary bit, because they're the competitors you don't see. The competitors you see, you kind of can second guess what they're going to do. That's why I think, that's why our historic barriers to entry will probably start to be eroded. And when they're eroded, it opens the floodgates and therefore makes it a very different journey.
It's amazing, isn't it? When you think about talk about the payment industry like that, where could that go? Could that be a facial recognition and you've paid for something? I don't know, a fingerprint.
But why would it not? Because
exactly.
At some stage, I don't know, you could wear something because you wouldn't, I don't know, a pair of glasses that had all your details. Yeah. So if, I don't know, wear your glasses and you can pay for everything, you can do anything. Yeah, it's not beyond the realms. It's absolutely not beyond the realms. And that's where it all gets, because we would probably call that sci-fi, but that's probably more reality than we ever imagined.
And thinking of the kind of intermediary and their customers at the end of all of this then, because obviously you've now got a bit of mixed experience. You've done provider, in the intermediary space. I guess we were chatting earlier, and I think this is where it's kind of interesting, is intermediaries sometimes will not see the providers having to balance all of these different things and making their decisions, trying to do the right thing for consumer, commercially, for the intermediary. It's quite a balancing act. How does that tend to, if an intermediary is thinking or they're feeling frustrated with anything, how would you explain that to them and how that all works?
Listen, I think I'm a big believer in kind of storytelling.
Yeah.
No, I don't mean storytelling. I mean using words, sometimes visuals, whatever it may be, to get the point across. It's about context. I believe that. So what I always think is interesting is that I believe that the provider, intermediary, broker, I'm talking specifically about the broker market, is a symbiotic relationship, right? So we need each other. 90% of the mortgage sales market is intermediated. So lenders need intermediaries for distribution. Intermediaries need lenders for products and proposition. That's symbiotic. But the way in which you get there will always be a challenge, because you have different stakeholders with whom you're actually trying to balance and get that right for. So the key is trying to get each other to understand the why. There's always going to be an element of tension, because quite frankly, we are all currently operating in a reduced margin environment. So you've got to be careful about your jaws, right? It's basic P&L, either bring in more income or reduce your costs, but your jaws need to get wider. And that's the same for everybody. So I think we respectfully contextualize. So for me, decisions that have to be made, no matter how difficult, as long as you explain the why, whether people choose to understand it or not, it will be ultimately down to them. But the fact that you take the time to explain the why is, for me, the key to this.
Definitely, and especially as the world keeps changing, isn't it? That's why these decisions are getting made and
that
what the impact is.
Yeah, it doesn't matter. It's like an advisor in front of a customer. As long as you signpost and give them the whys and wherefores, most people are going to listen to what you're going to say. It's the same thing in any type of relationship, isn't it?
Yeah.
Particularly when we're all working in that collaborative manner.
Yeah.
Excellent.
I feel like I could talk to you all day, Sidney, about your career and get all these different insights from you. It's been hugely interesting. If you're obviously, we've touched upon a lot of subjects there. We've looked at environments, lending, looking at that kind of advisor role. If you had one tip to any intermediaries listening to this episode just now, what would be your top tip that you would give them?
Oh, wow. I'm not sure I'd listen to me, but what would I say? Listen, I think it's probably two things. It's the agility and the be bold, because standing still, doing the same will only net the same result. So now is the time to kind of reimagine, think differently, be bold, be agile. Don't be afraid to make a mistake.
Be comfortable with the uncomfortable. Yeah.
There we go.
Excellent.
Well, that's growth, isn't it?
It is. Thanks, Sidney.
Thank you so much, Sidney. That was amazing.
No worries.